What's up, party people? Every time I decide to do one of these YouTubes earlier on in the day, and then it comes time to do the YouTube, I think, why did I just decide to do a YouTube? No, I'm excited to be here with you, fine folks, even though I don't get paid for this. And this is my witching hour. This is when I always want to fall asleep after the market closes. But I got myself a glass of wine, and I have a bunch of stocks to talk about. I'm looking handsome in my sweater. I went to the kids' school today. My boys turned 5 today. This is their birthday. Most of you probably have no idea the history behind my boys, but their nickname is AIT, which is accidental identical twins. So both of them are accidents. Identical twins, of course, is always an accident, but so anyway, I'm happy that they have made it to 5, and it has been some 5 years. Thanks, Chris. Meanwhile, I'm not trading right now, but everything always intrigues me. So a biotech that I've never heard of came out with news after the market closed 20 minutes ago, saying that their lead drug failed and they are halting development of it. And the ticker is CRGX. And I just spent the last 20 minutes researching it. I have not bought any stock. It just unhalted 3 minutes ago. But these are the kinds of things that just are so interesting to me. So why don't we talk about CRGX? And I'll do other stocks. You can see how my mind works. So CRGX had a lead drug and no other drugs in development. And they were supposed to have an interim readout this first half of this year. It's CAR-T. And it went, I figured this all in the last 20 minutes. I don't know anything about this company. It went public in the fall of 2023. They did a $200 million private round in the spring of 2023. Then the IPO in the fall of 2023 raised them, I don't even know the number, 200 million, let's say. And then they did a 100 million private placement in 2024, in May of 2024. The prices of the IPO were 15, the private placement was 17, and I don't know what the pre-IPO round was at. It doesn't matter. They have nothing. This is the whole company. It was this lead asset that's a zero, and they are about to initiate a dose escalating study in a phase 1 trial the second half of this year. I'm assuming it's worth nothing, and they have some sort of platform. Only reason why it interested me was that in the press release, they said they were firing half of the company, and they give the cash balance, and they said they were also going to undergo a strategic review. Though the words were kind of light in what they didn't say strategic alternatives. They just said kind of, I think it might have been strategic review. So I went to the proxy and I looked to see what the board looks like and what the management team looks like with ownership and stuff like that. And it's quite frankly, it's terrible. It's shockingly awful. I'm not sure I could probably say definitively I've never seen anything this bad for a recent IPO in my life. I don't even understand how it's possible. The entire board and management team own less than 1.5% of the company, and that includes all options. If you take all the options out, they only own, a fraction of 1% of the company. There are 10% holders of the company. Perceptive is one of them. I think Fidelity is one of them. It's Perceptive, Fidelity, and Third Rock Ventures. Together, they all own 35% of the company. And then Janus and T. Rowe own another 5%. The management team only owns the management and the board only own 109,000 shares out of like 60 million or 45 million or 50 million or something. They don't even own 0.25% of the company. I never seen anything like it before. So they're not, the management team and the board are definitely not incentivized to do anything for shareholders, but it's a recent IPO. So my guess is all those people were put into the company by Third Rock, by Perceptive, and by FMR, by Fidelity. And the overwhelmingly likelihood here is a sale or some form of shutdown, or else they wouldn't have said they were going to do a strategic process. They didn't use a strategic process, whatever they use, some sort of strategic thing. So what's it worth? I don't know. I mean, it'd have to be traded at a pretty big discount to cash for me to be interested. At $4, I can't even remember how many shares are outstanding. I think it was 60 million. There's oh no, sorry. There's 46 million shares outstanding. I did another 4 million for severance cost or whatever. I made it 50 million. So at $4, it's 200 million of net cash. And I think they said that they have 350 million of cash as of December 31st, I think. Let me look. 368. So look, that's, we live in such a funny world, right? And I'm going to talk about another idea of mine soon. But if you were a private company, okay, and you came out, your neighbor ran it, and he said, listen, I have this company. It has $368 million of cash in it. Our lead drug just failed. We're shutting it down. It's over. We have another drug that's going to start dose escalation in the second half. And we have this platform, which I'm assuming has negative NPV value, but whatever. I would like you on board with this company, not on the board, but I want you to invest in this company. What do you say I let you invest at a $200 million valuation? I would say to you, I don't understand. Don't you have 370 million of cash? And he'll say, yeah, we just like you so much. $200 million valuation. And you could have daily liquidity. Actually, you could have minute by minute liquidity. You can buy and sell anytime you want to. Just let me know. And I don't know what you're going to sell it for, but daily liquidity. You would think the guy was crazy. And the stock market is offering us these opportunities today. Okay. This is one of them right now. I'm not buying any of it. I have not bought one share of this. I'm just telling you that that's a weird situation, right? 370 million of cash, 200 million fully diluted, kind of with severance cost market cap. And they've even said that they are going to evaluate strategic options. That's the phrase they used. And nobody believes any of it, right? If you assume they burn another 75 million, get to 300 million of cash, that's still $6 a share, right? 6 times 5 is 300 versus now it's below 4, I just find this stuff so interesting. And the two that I want to talk about today that I do own, and people that follow me on Twitter know this, are KROS, KROS, and SAGE. Now, what's interesting about both of these is one of them was a biotech darling at KROS, and SAGE is a biotech pariah. And they both have similar theses, though they could not be more different, I think. Let's start with KROS. So I'm going to try to make this, I'm going to try to streamline this. So KROS had I'm going to try to do most of these pitches pretty quickly. KROS had a lead drug that everybody loved and they were very enthused about in a phase 2 program that was never tested in that indication or that drug before. So it was a brand new indication, brand new drug. And for whatever reason, again, I'm not a biotech guy, people thought this was the bee's knees, and they gave it a multi-billion-dollar positive enterprise value for this indication, this drug. It's not important. The drug does not work anymore. the drug had a safety issue, and they discontinued the drug. I can go through the timeline, but it started in the middle of December and it ended about a week ago. They saw the safety signal in December, see the stock blew up, and then now they've discontinued it completely. The stock now trades at $11.35. Okay. What do you get for $11.35? They have $18 in cash as of January 1st. That's an estimate. Okay. You then have a partnership they signed in December with Takeda for their other lead drug that paid them $200 million upfront. That's in the $18 in cash. And you get royalties and milestones if that drug is ever approved, which conservatively estimated, I think, is worth somewhere between $4 and $6 a share today. Okay. So all in, you have a $24 to $26 NAV of the company, and it's trading at $11 a share. Okay. The only other asset in the company is a phase 1 trial that's going to read out this quarter in healthy volunteers that was originally going to target weight, and they pivoted to DMD 2 weeks ago, and that made people upset, and they sold the stock off on that too. But you are basically paying half the enterprise value if you assume that Takeda has to run all the trials and spend all the money to get that drug to registration. So Takeda just signed this deal in December, and again they paid $200 million up front, and they have milestones and royalties in the future. To me, it's incredible that you could buy something like that in the open market when, if that was a private company, under no circumstance would that be available. Okay. In private companies, you assume that the pipeline and the operations have positive NPV, right? Or else it wouldn't be funded by the people that are running the private company and owning the private company. In this situation, all I'm doing is taking the cash plus the NPV or an estimate NPV of the Takeda partnership and getting to $22 to $24 a share, and the stock's trading at $11.37. The other benefit of this company versus a lot of biotechs is there's an Israeli company, an Israeli venture capital firm that owns 12% of the company and has 2 board seats. And the CEO, I believe, my numbers, I don't have any of this stuff in front of me. I think the CEO owns 5% of the company, or it's a material amount of shares. It might be less than that, but I think my number was like he has 1.2 million shares or share equivalents. And he is most definitely not incentivized to run this into the ground. Why does this exist? Well, the company has most definitely not said that they are liquidating, and they are looking at strategic alternatives. So people assume they are going to burn all of that cash to the ground. That's it. There's no reason to believe this will be liquidated, and we will get our $22 to $24 a share anytime soon. The stock market has a tricky way of working, right? Even if a year goes by now and they do nothing, and the phase 1 trial is crap or not interesting to the stock market, that 22 to 24 just becomes, 19 to 22 or whatever it is. They've cut their burn dramatically. Most of their burn came from those 2 lead trials, 2 lead drugs. The first one has been discontinued, and the second one, Takeda, is going to be responsible for all upcoming funding. So you basically have this, shell, this vehicle that got washed out by tax loss selling in December. Those people know the company the best. They can't rebuy in January because that'd be a tax wash. You have more things happening in January that weren't even that bad. A lot of people were worried that they were going to continue to invest in that drug with the safety signal in December. And instead, they discontinued it. And here we are sitting at half net asset value. Okay. The other idea, and I made this pretty big. I bought a little bit of this on December 31st. I think I might have talked about it in my year-end YouTube, but maybe not. It wasn't big at all. And then I bought just a ton more on the day that they discontinued the drug a couple weeks ago, 10 days ago. And, what we live in such a perverse world. What is it worth? Like, I was telling somebody, I sold some of it above 12, but it's still a 16% position, something like that. I mean, if it went to 15, would I be out of a bunch more of it? Yeah. But it really is. I mean, my math is it's pretty not controversial, right? The 18 is going to burn. It's not going to burn $1 a quarter, but it's going to burn, and the Takeda deal, that could be a CVR. That's done, right? They pay for all the funding, and there's no that asset, that value is solidified. There's no money needed in the future. I mean, they could shut the company down tomorrow, spend a couple dollars to do that, give us all $16 a share in cash and the CVR of Takeda, of the Takeda deal, which is worth $4 to $6 a share probably. They're not going to do that, but that doesn't mean it's not worth that, as long as you don't think they're going to be value destructive. And I don't think they will be, based on the people that are on the board and the ownership of the CEO. Now, on the flip side, you have something like, hold on one second. On the flip side, you have something like SAGE, which I think is super interesting. That's a bigger position than, oh no, it's about the same size position as KROS. Now, SAGE is this, I mean, there's no other way to say it, this dumpster fire of a biotech that has destroyed more value over the last 5 years, at the level of like Bluebird. And I am trading, in case you're wondering why I keep looking at my screen. Sorry about that. It's how I make a living. It ain't off of you folks. SAGE basically is this disastrous neuro company that has failed in pretty much everything they've done since inception. Had this great promise for depression drugs, and the only thing they've gotten past the finish line is this drug in postpartum depression that was supposed to be for major depression, MDD, and they couldn't get it approved in that. And their partner in this is Biogen. And they launched this drug with Biogen about a year and a half ago, a year and a quarter ago. And that indication is not a big indication. So depending on who you speak to, it could be anywhere between 300 million in peak sales, and Sage says $1 billion in peak sales. Okay. They had a bunch of trials that read out in 2024, and almost all of them failed. Well, sorry, all of them did fail. I'm sorry, I'm trading. And Sage has, I don't know, as of January 1st, probably about where it's trading at right now, about 720, 730, 740 in net cash. Call it trading at net cash as of January 1st. It's probably a little bit better than that. Okay. They probably have a little bit of net cash. Okay. Rewind to 2 weeks ago. The stock was trading at five and change. And Biogen, its partner, which owns 11% of the company, issued a 13D letter saying they want to pay like 722 for the company, which was a negative enterprise value as of the last quarterly balance sheet. So they were offering to take out their partner at a negative enterprise value. It would have been something like a negative 80 million or 100 million in cash. And it was a very embarrassing thing for Sage, given the fact any company that's being offered to be purchased for negative cash is basically saying, we think you are just immense value destructors. And you have no place in our world of corporate governance or shareholder value. Sage was shocked. I'm going to get through the valuation in a second. But Sage was shocked, put out a press release saying they'll evaluate the offer. They then sued Biogen, saying Biogen is breaking its agreement when they purchased 11% or 12% of the company. They are supposed to not solicit any kind of hostile movements towards Sage, and they were seeking a court injunction from Sage, from Biogen, doing things like this in the future. Sage came out yesterday or Monday, I think Monday, saying that they have rejected the 722, and additionally, they are going to launch a full strategic process with Goldman Sachs running it. And there's no timetable, okay? So what are the really great things about Sage, and what are the really bad things about Sage? So for starters, the Sage board and the management team own little to no stock. Okay. Again, it's just the way it is. And that's bad, right? However, Sage has many 5% shareholders. I don't have it in front of you, but I think at least 5 different groups own over 5% of the company. Unfortunately, most of those are long-only owners. Okay. Sage has almost no pipeline right now. They have 2 drugs in the pipeline. One of them in September of 2024, Biogen was partnered with it, and Biogen dropped it. No longer partnering with them, no longer interested in developing it. Sage had said they will decide what to do, if anything, with that drug around the summer of this year. Consider that drug dead. Okay. The second drug is, I think, in a dose escalation study right now. It's a phase 1 trial, and that won't read out until the very end of this year. And that's it. That's the entire pipeline of Sage. That and this 50-50 drug they have with Biogen. So what is this 50-50 drug they have with Biogen worth? The market's been pretty bearish on it because they thought the market was the market opportunity was small, and they thought because they didn't get approval in major depressive disorder that this was kind of an irrelevant rounding error drug. Neither needle moving for Biogen, neither needle moving for Sage. And they're right. It's not. Biogen is a $20 billion market cap that has its own problems. Stock's been a disaster. You can go pull up a long-term chart on that. And Sage needs a lot more than a few $100 million a year in sales, given its cash burn and its lack of its pipeline. But what's it worth? So in quarter 3, the drug did 80 million of sales, up 49% quarter over quarter. It's currently, as of the last week of data coming from dispensaries, and that's not fully accurate, but it's run rating at 120 million of sales right now. Okay. Growing pretty nicely, right? The drug only launched 18 months ago. Okay. It's so funny. My friend just sent me a note on Sage, just came out right now, saying reevaluating Sage and increasing price target, but stay neutral. They're raising their price target from 6 to 9. I love it. Ridiculous. Anyway, let's say that this drug can end up doing 500 million of peak sales, and it's already well on its way to that, by the way. This isn't like pre-PDUFA, pre-launch. They're at 120 million run rate, up from 80 million in Q3, and it's January. So it's reasonable to assume they'll exit 2025 at a $200 million kind of run rate level, well on its way to the $400 to $500 million level. most drugs sell for, 4-5 times peak sales, right? Not 1 or 2 times peak sales. This is the only drug approved only pill that's approved in postpartum depression. Now, I don't know a lot about drug development or about biotech, but I assume it's a negative that this drug is just given for 2 weeks to somebody and then they're off of it forever. You need to keep getting new patients to fill the pipe. This happens with a lot of drugs, of course. And the idea is that the clinicians you train and the people that prescribe this constantly are refilling the pipeline as it gets more widely known and widely available. So I don't think that's a big deal, but I think it's a point to note. This isn't like oh my God, out of my mind. This isn't like BBIO, where once you're on it for life. So let's just for argument's sake use it 2 times peak sales, when I think it really should be more like 3 or 4 times peak sales. If you use 500 million as peak sales and you use a 2 times number, they own half of it. So that means this is worth $500 million to Sage. Okay. Sage has like 65 million shares outstanding. Something like that. Let's see. So yeah, 61. I add up to 65 for severances and all the rest of that shit. At 500 million valuation, divided by 65, you get $7.70. If you add the cash on the balance sheet right now to that 770, you get a $15 stock price versus it trading at 737. Okay. But that's not all. Biogen just in Q3 of 2024 submitted approval for the EU for this drug. And it's unknown what, if any, milestone payments will be due to Sage if it's approved. But they do get high double-digit royalties in the EU for no cost. There's no co-promote there, okay? That has significant value. It's not in my numbers. It's probably well over $100 million NPV, okay? Finally, they have a Japanese partner. The Japanese partner filed for approval in MDD, not in PPD. And that, who knows if it gets approved, because that was not approved in America. But that apparently will trigger an $85 million milestone and 20% royalties. Again, worth significant money, okay? The beauty here is that Biogen can extract huge synergies on top of your typical buyout multiple of a multiple of sales, because they already co-promote this drug with Sage, okay? Everything gets eliminated. Sage goes away and the drug just goes into Biogen, okay? You can make an argument they could pay that 3 or 4 times sales multiple, which gets you to $20 or more a share. And what's your downside? Your downside is they run this full process. The only logical buyer is Biogen, but other people could buy it. It's a value proposition, right? If I was going to only have to pay $100 million in EV for the company, and I get 50% of this drug that's going to do 500 million of peak sales, I would jump on that all day long. So there will be other people that are interested in the process, though clearly Biogen is the only one that's really likely to buy them. So the risk here is that Sage wants 15 or 18 or 20, and Biogen wants to pay 9 or 10, and they can't come to an agreement. And the stock goes where? Well, in that situation, I assume the stock goes back to 5 or 6. And I don't assume that this is over, though. So let's say the stock goes to 5 and a year goes by, 9 months go by. We get to the end of this year, and this drug is now doing 200 million of sales. And the cash went from 7, whatever, 30 or 720 or 740 to 5. And it's trading at 5. The math I used before about this being worth 2 times peak sales or 770 does not change. Take the 770 plus the 5 in cash, and you get to 1270, plus the European royalties, plus the Japanese partnership. And the stock's trading at 720 right now. So for me, I think that they are in a very tough situation, and it'll be very hard for them not to end this process with a sale. I do admit it's going to be hard to come up with the right price, given it's so far away from what fair value is. Specialists think this is a zero. They think that Sage is going to burn all of its cash on its science projects and go bankrupt. So that's the current mentality of people that own Sage, or people that know Sage that are specialists. What I see is a drug that has a tremendous amount of value and a company trading at net cash and them against the wall in a strategic process. I'm not speculating they're going to be in a strategic process. I'm not speculating that Biogen wants to buy them. Both of those things happened. And for Biogen to put out a 13D and do something like this so hostile, even though it's a $20 billion market cap, means they definitely think this has value and it's worth this move, because they look terrible now to future partners, right? Why would I want to partner with Biogen if I have to risk a 13D coming out where I'm going to be offered to purchase the company at below cash, right? Why did Biogen do that? They did that because they had to do it to mark the unaffected of the $5 and change it was trading at before the strategic process kicked off. Because now they can say we paid 10 and we paid 100% premium. That's the goal of those 13D letters. It's to mark an unaffected. I don't think it's going to matter that much here, because I think it's worth a lot more than the $7.30 is trading at. So anyway, I like Sage a lot, and I would be very surprised if the process ends without a sale, and I'd be very surprised if that's below $10. I actually think it won't be below $12 or $13, but we'll see. So those are my two biotech ideas that have gotten pretty big over the last 2 months, 2 weeks, whatever, this month. Whew. I'm back to this screen here. Let's see what you got here. Limited downside, limited upside. What's the best way to play it? Short puts, covered calls. Eric, what were you referring to? Were you referring to CRGX? Because I don't know when you wrote that. Or were you referring to KROS? You're not going to be able to get any calls. Yeah, there's no. I put on some 1x2 call spreads in KROS, which you can do. And I like that because the odds of it going above 15, 16, 17, 18 are very low. And vol is still jacked. But I did those 1x2 call spreads against my common. You can sell puts on it. You have pretty much no risk since it's a bucket of cash. But I think there's a lot of upside here. I mean, the phase 1 trial could read out, and people really like the data they see. And I don't want to limit my upside by selling puts on it. They're also not that liquid, so it's not really my thing with this. How fast is the SAGE process? I think that one will take 3 or 4 months. They don't want to sell, and the most likely buyer is Biogen. It would be surprising to me to see them agree to a robust price so quickly. So I think that will take time. My wild card on Sage is I think there's probably at least a 50% chance we get an activist. Now, they have a staggered board, so you can't really do much there, but you can increase a lot of pressure. And to me, obviously, I like it a lot. I think that this has a great activist potential, given your margin of safety with the cash and this valuable asset that's much more valuable with Biogen owning it than with Sage owning it. But I don't think you're going to lose a lot of money with that cash burn, Glenn, in the 3 months between now and when this is over. I think the stock is more than anything pricing in that cash burn. And if you want to burn the cash to June 30th, you get a $14 stock price instead of a $15 stock price, right? And I think my 2x sales multiple is pretty conservative. If you want to use 400 million at peak sales, maybe use a 2.5x sales multiple. I don't know. There's lots of ways to play the game here. Oh, my throat's hurting a little bit. I might not be able to finish this YouTube. It hurts to hear myself speak. The only other one I really wanted to get to, AMPY, I mean, one of the worst situations I've been involved in my whole career. Um, I don't know what else to say. I can't believe the deal they did. It's a travesty. I hope it gets voted down. It could get voted down. Um, there's no words. There's no words. They should never have bought something, let alone with stock. And another situation where the management and the board owned no stock. So I got what was coming to me. Disgusting. The only other one I really wanted to get to, I'll probably do another YouTube in a couple days, is TripAdvisor. And I talked about that one on my year end, one of my best ideas of the year. And it's kind of played through as I expected it to. Well, better than I expected it to. I thought we would see in the proxy that there were bidders in the high 20s or 30s in the spring that walked for whatever reason. That happened. There were 3 different bidders and they all walked. But I did not expect to see a strategic bidder that is still interested in buying the company and recently reiterated that last week. And that was in the proxy. So I have no idea what plays out there. The more likely outcome is that nothing happens and the current deal with Liberty TripAdvisor goes through. But Liberty TripAdvisor is very incentivized to negotiate with that entity, the strategic, because they can get more money out of them potentially than they're getting in this TripAdvisor deal. So I wouldn't be surprised to see a lawsuit between Liberty TripAdvisor and TripAdvisor asking them for permission to see if the strategic would offer a superior deal than TripAdvisor is offering Liberty TripAdvisor. Remember, there's 2 different things here. It's whether the strategic buys the whole company, which is TripAdvisor, or the strategic just buys Liberty TripAdvisor, which is whatever 20-something% of TripAdvisor and control. 2 different issues. And the Liberty TripAdvisor can't say they've got a bona fide superior bid because that's not what happened. It was a bid for all of TripAdvisor, and they were going to pay more money to Trip and to the preferred if it went through. So tons of moving parts with TripAdvisor. There's been some good things written on it. There was a Vic write-up recently. I know Glenn wrote up something for Whitney Tilson's newsletter. And if you can get access to that, you can read about it there. Yeah, I'm very happy with how it's played out, and I'm still invested and still involved. So, is it super likely to see another company bid for Sage? If someone actually did bid, how would they be interpreting Biogen's hostile actions? It is super unlikely to see somebody else bid for it, Jason. It's not because they don't want the drug. It's big pharma companies aren't looking to co-promote with another pharma company. I mean, you don't have the same synergies with that kind of situation. So, and this drug isn't that great, right? This isn't some blockbuster drug. So I don't know how Sage is going to run this process. They're not going to have a lot of other people interested, but it doesn't mean that they can't get Biogen to pay up. And I think Biogen could pay up a lot, and it's still very accretive for their shareholders. So I think people are missing all of that. I think Biogen just got the ball rolling with their bid, and you'll see a double-digit price and a sale with Sage. I don't think they have any other way out of it. So I'm really enthused there. All right, my throat hurts. I was going to talk about more ideas, but I can't. I'm definitely not going to have my throat hurt while I yap. So let's pick it up again probably next week, because I'm not going to want to do this anytime soon. Obviously, BBIO, what a January. We fucking did it, people. $36. Unbelievable. Big victory lap there, obviously. And I'll pick up the BBIO victory lap next week or the week after. Thank you, Chris. Thank you, everybody. Take care. Love you all. Have a nice night. Bye.